Good morning once again, and welcome to the Haven Financial Group radio show. I hope your morning is going well, and let's keep it that way. And maybe you want to give us a call at 612-504-8400. Visit us online, havenfinancialgroup.com. Today or anytime this week or in the future, celebrating almost 11 years of helping many, many people planning for retirement, in retirement. And if you're younger, it's never too easy to start because later on in life, you're going to appreciate starting early, and you can mark my words. So again, we're talking about comfortability in retirement and what that really looks like.
Right. And a lot of times it looks like having a partner to help you out. And if you're looking for a partner, 612-504-8400 is how you reach the folks at Haven Financial Group. Another, obviously component of being comfortable is having a steady income stream. You've been used to that all of your working years. Maybe you've tucked away your money, and now you get to the time that you need to start drawing on that money. But how do you go about it? How do you put yourself on a budget, Larry? How do you make sure that that money is going to last? So let's talk about a steady income stream and what you guys do to make sure that happens for folks.
Yeah, it's one of the biggest questions we get when folks come in that are close to retirement. Just this week, I had a couple in, and they're about 2 to 3 weeks away from retirement. Don't really have much of a plan other than their plan was just throwing it in their 401ks for many, many years, and they've done a great job. But now they're going, what do we do now that we retire, and where's the money going to come from?
Right.
Which is a very good question, and one that we should address because, first of all, we're going to address what type of income streams will you have? Are you one of the minority that still has a pension? If you do, congratulations, you're going to really like it, but it's a small percentage. My wife and I and many, many others will not have a pension. So then what about Social Security? It's going to be here. I don't feel there's a threat. There's changes that could come. But at the end of the day, Social Security is a major income stream. For many, it's actually the bigger than their portfolio. So that's why we teach a lot of classes on when is the optimal time to be taking it based on your situation. So Social Security paired with pensions. And then, well, that isn't going to be enough. Or maybe I don't have a pension. How do I create my own pension? And how much am I going to need to draw from? Now, when you retire, there's a good chance that you're not going to know exactly the amount that you're going to need. That's very normal. But that can be adjusted. But what we're going to do is we're going to say, well, what type of money do you have? Roth IRA, traditional IRA? Is it non-qualified brokerage savings? And where do we draw from and how much can be adjusted in the most tax-efficient way possible? This conversation is going to be driven by the tax discussion. Why? We want to draw from the right accounts at the right time to make sure you're not giving Uncle Sam more than they deserve. And in our case, we're going to probably bring Lance, our CPA, in with our team. Whether you use him to do tax prep or not, it's part of, we don't charge for tax planning. And we can map out exactly how much, make adjustments, withhold taxes, and again, make sure we're drawing from the right accounts. Mailbox money. We want to satisfy the income for the things first that we need. We got to have a roof over our head. We got to have health care. We got to have food. And then what about the things we want to do? You want a lifestyle? You want the country club? You want to travel? We're going to buffer those things in because if you want to do them, we got a budget for them, and that takes money. And we want to incorporate that into the overall plan, not negate them and go, oh my goodness, I didn't plan accordingly.
Yeah, and I think that's something people don't stop and think about because, as you said, we don't know exactly how much money we want, but I think some of the questions that you might ask, like you said, is, do you want to sustain the kind of lifestyle you've had while you've been in the working world, and what is that lifestyle? One of the big things is healthcare costs. You say this every week, Larry. People underestimate what their healthcare costs are going to be.
People do underestimate. It's a big number, and the number's not getting smaller. It's only getting bigger. Many know that Glenn and Isabel in our office, we have the ability to help many people in Medicare, supplements, Advantage, Minnesota Care, MNsure, maybe bridging the gap because you're not 65 yet and you retire a little earlier. Whatever the reason is, sit down, talk through it, because if you didn't know, the insurance world is a little upside down, a little goofy. And healthcare can be still, well, let's put it this way. It still gives me a headache every time I hear him talk about it because it's very confusing, difficult to navigate. But guess what? You don't have to navigate it by yourself.
Mm-hmm.
You
Right.
don't have to pay somebody or pay more by having a partner like us and Glenn and Isabella to do the work for you. By the way, every single year shopping it out to make sure you're in the right place, because just when you figure it out, almost every year they make changes. Imagine that.
I can't. Yeah, I think a lot of people believe that once they go on Medicare, they don't spend any more money, and that's unfortunately not the case. Wouldn't that be lovely if that was? But that is not the case. So, the folks there at Haven can certainly answer all of your questions. Inflation, that's something that you guys also we talk about a lot, and you guys really plan for. A lot of people in their plans, they've got their consistent income, but they're not thinking about inflation.
Inflation's a game changer. I still don't understand those in the industry that don't plan for inflation, or maybe don't factor it into their planning process, or they take it too lightly and they don't factor in enough inflation. Because I already said it, it's a game changer. Our wealth management team, our team, investment team, our certified financial planners, Kyle, Greg, Brent, et cetera, we incorporate that in. Plan for. We actually use a higher number than the average inflationary rate historically. If it's less, fantastic. That just means you have more money.
Right.
So you want to factor it into the equation. You want to plan for the long run. You want to develop an emergency fund. I've said this for as long as we've been on. Most folks that are getting close to retirement, or not even close to retirement, or even in retirement, they don't have enough liquid monies in the bank, and they have everything at risk in the stock market. We love the stock market within reason, but many don't have 5 to 10,000 liquid. For a retired couple, we like to see, I'll just throw it out there, 50 to 100 grand in a liquid position. I can tell you most people don't have it. I just briefly just mentioned the healthcare costs that we talked about. I'd be remiss if I didn't bring up, just because this week I had 2 different situations where people came in. For example, a newer client of mine, he came in. I said, "Where's your wife, Martha?" "Well, I don't think you know this, but she has dementia, in this case, Alzheimer's. And let's just say you don't want her here. Some days are really bad and others days are not good." He goes, he's only 65. And on top of that, his wife's sister lives with them, and she had a stroke. So his whole retirement is upside down. He goes, "I wasn't planning for this." I said, "Do you have long-term care or your wife?" "No, we do not." "She already has Alzheimer's.
Right.
This could be many, many years." And he goes, "I just know that," he goes, "that, eventually she's going to have to go into a facility." And he goes, "I'm not going to divorce her. I'm sticking with her. But I know that my estate is probably going to be spent down probably to nothing." See, by that time, it's too late to get it. You need to look at long-term care options before that. And I had another one as well. Her mom, actually, they just put her in a home. And she goes, "Do you know that it costs like almost $15,000 a month for a nursing home?" And I go, "I am aware of that. And do you have long-term care insurance? Does mom have it?" "No, she doesn't." We've started the spend down process. See, we all hope and pray that none of us are going to need to go into a nursing home. But do you know 70% of us are going to need some care?
Yeah.
If you've put off that conversation, or if you got scared away by a Cadillac plan by somebody years ago, I encourage you to come in and visit with Glenn. Look at the viable options, the much better options that are available today than they used to be. You don't have to have a lot of money. You don't have to have perfect health, but you owe it to have a conversation. Your plan, and we joked many times over the last several years, is your kids probably are not going to be the nursing home you can count on. So have that conversation, see if it's a viable option, and you might hope you really you do that sooner than later.
So these are just some of the things you need to consider when you're putting together your plan for consistent income. There are so many others, just keeping in mind that emergencies happen, roofs need to be repaired. People live longer than they had anticipated. That can certainly happen. And of course, there can be some well-being things that you need to consider before you make that decision about consistent income. If you're looking for a partner to help you walk through all of these steps, give the folks at Haven Financial Group a call. Their number is 612-504-8400. Let me give that to you again. Let them know that you heard us here on the radio and you'd like to come in, make an appointment free, and sit down with someone and talk a little bit about what it is you're looking for in a partner. 612-504-8400. That is the number, and that's the way you get a hold of the folks at Haven Financial Group. When we come back, how to preserve and refund emergency savings in retirement. Just as I mentioned, life happens, as Larry likes to say, and sometimes that can be expensive. So we're going to talk about how you can keep that fund on hand and how you can refund it once you need it. This is the Haven Financial Group Radio Show.